Right, so you've asked about supports and resistances for um, sterling yen. Well, we've got the support line on the weekly chart, the brush around about here. We've got this bullish impulse, and we're starting to see a correction lower. So drawing the Fibonacci, which I like to use from the low of that impulse to the high, we've got a 38.2 in and around 172.06. Okay, I like to see the market come in, and especially if there's a confidence like we have over here, I like to see the market come in and test the 78.2 and the 50% mean reversion. So either or in between. Okay, so that's where I'm anticipating the market to come into. So I'm in anticipation of a so you've got the impulse and a correction to come in lower to test the trend line support, to test the 38.2, to test these old highs. You've even got this little up there, but I want to see it come in lower than 72.50, 72.30. I want to come in to see it test 172 because that is where I've got the 38.2, but I anticipate 172.50 to be support, 172.30 to be support because they're old highs. They're significant old highs, as we can see by those wicks on these weekly candles, right? Um, so again, I'm looking for this impulse and correction. Okay, if we move down to the daily chart, we can see, so this is the weekly trend line here. I'm just going to dim that down. I'm going to take away some of this junk. Right, on the daily chart, so we've got our thesis coming lower. Okay, I'm going to dim that down as well, so move it out of the way. On the daily chart, what can we see? We can see that the market has respected that trend line until this point. Okay, so we're breaking that trend line. So we're breaking that trend line, turning it red to signify that we're now bearish below it. Let's pull it out a bit further. So we're bearish below this trend line, right? Which ties into our weekly thesis that we had earlier, bearish. Um, we are heading towards the weekly trend line and our targets 172.50, 30, around about 172 the figure into this area. Right, so those are what we're looking at. If we pull ourselves into the 4-hour chart, if we pull into ourselves to the 4-hour chart, we are looking at resistance around here, and that green candle in the middle there. Okay, so that is where I'm going to mark my resistance area. Levels we can take from that low here. This was the lowest low before the highest high, so that's probably significant. And that was, depending on your broker, about 173.80, call it 85. We've got this candle here. Now I'm drawing significance to that candle there because it was a tight range and there was efficiency in the market. So therefore, I'm going to give that significance and say, give it a high and a low. Okay, so makes sense for 173.77, 173.50. Those are significant levels. We are testing 177, 173.50 currently, and we're being rejected. Okay, if you were to draw your Fibonacci on that move, it aligns with a 78.6, which is an extreme of the Fibonacci scale. And if the market fails at that level or thereabouts, it tends to impact it and send it lower. So it's failing currently at this highly important area of resistance. So I'd be in anticipation of this market crumbling. Um, Now we've got support on the day there and down here. So take note of all of those levels that are marked. They've all been eyed against significant areas of structure in accordance with the weekly, daily, and 4-hour time frames to give you a pretty decent picture of what we may or may not see downside or upside. Now, break of 173.80 would open the pathway to a test of there, 174, moving up towards 174.40, 50, and 70, and the highs. And really, if we break above that box here, then we're back to neutral really, and we don't know what's going to happen. The thesis for a continuation lower would more than likely be in jeopardy at that point, and we'd be starting to refocus on a market that's staying and respecting the weekly bullish trend or prospects of a continuation to the upside for the foreseeable future for fresh highs.